Is the crypto bull market over? We see the market cap now is below $4 trillion. But at the same time, when you look at the charts, look at this. Bitcoin still very, very substantially right in the middle of this point of control where all of this volume traded. Even if we lost this a little bit, it's my opinion that it would be more of a bear trap situation before we have a continuation higher. It's notable to pay attention to this head and shoulders that is posted. Could we see a swing all the way down from this point, all the way down here to about $110,000? I think this is a little bit lower than we should expect, but we got to pay attention to this chart. Similarly, we see the total 3 chart, massive bullish inverted head and shoulders pointing for a breakout to the upside. We got the breakout, and currently what we've only been able to do so far on this pullback is essentially test this breakout region. If this drops down below, the next level I'll be watching is right about here, just at about $1 trillion, about 998 billion. But we have a lot of charts, some signals to keep you on the right side of these trends so you don't get shaken out right now with all of this chop that's happening in the market, because there is some monster signals. So let's get into it. Hit that like button, hit that subscribe button, ding the bell. I'm just getting this retweeted out on all the different spots. Do your part. Also, share some love, retweet this out, get active in the live chat. We're going to be going live here in just a moment. Let's get after it. Are you ready? Let's go. What's up, everybody? We're getting that shakeabout right now. Everybody is so excited about the bull trend on Bitcoin, on crypto, on altcoins, even in the stock market. But people are excited about the gains in a bull trend, and they have no idea what to do when the market has any bit of softness in it, any bit of a retrace. And it's evident in the sentiment that you see in people talking about on crypto Twitter, especially even in the live chats, the comments that people make, the fear that people show, but also in the on-chain data that we see and the activity on-chain. Whales are stacking right now while retail is asleep at the wheel, or they're fleeing the scene because they're scared out of their wits. That's not how you make it in this market. We're going to be talking about that because we're seeing some very sort of conflicting signs, but overall the context is overwhelmingly bullish for what we're seeing going forward. So as you roll in here, shout out to everybody that is in the room. Big love to everybody that tunes in on a regular basis. I do appreciate y'all being here. But I do want to say, as you roll in, if this is your first time, it's not going to be your last time. My name's Kellam. Welcome to the BitLab Academy stream. Shout out to our channel partners, Bitcoin IRA. You can find more information on them at bitcoinira.com. You can day trade. It's not just, hey, throw money in a retirement account. You can day trade up to 80 different cryptocurrencies. And, when you want to rotate those profits into Bitcoin, you can do all that in a tax-advantaged way. It sounds boring, right? Well, we did an example with Chris Klein about 2 months ago. Even on the $7,000, $7,500 maximum that you can contribute, if you trade and hit any of the targets that we're thinking about on some of these altcoins and rotate those into Bitcoin, that could save you over your retirement account for when you cash out later about a $3 million difference just on what you're doing today. So get active over there. Head over to bitcoinira.com. There's a number on the top of their screen in which you can give them a call. I'll show it to you right here. Give them a call at 1-877-936-7175. Let them know Kellam sent you from BitLab Academy or from Discover Crypto, whichever one you want to say. Also, shout out to Arculus. GetArculus.com, spelled just like this. GetArculus.com. Use code BitLab20 for 20% off. The best crypto cold storage out there. Protect your crypto. Protect your future. Now let's talk about it, because we're seeing a massive downshift in crypto. Oh my God, we're having a pullback. Look at this. We're still right here in that near $4 trillion range. I don't know why people are losing their minds. Yes, there is a head and shoulders as we're seeing on this market cap, which is indicating a bit of a maybe deeper pullback. It's my opinion, and I've been doing this for years. It's my opinion that if we come over here and we go to total, again, I just want to remind you all of this. If you click on the chart, so you don't have any tools, right click first, so it turns off those tools. Then click with your left button and then just type TOTAAL. Boom, it automatically pulls up your search window. You don't have to come up here and do all that. But we do have a head and shoulders here. These are typically reversal patterns. The reversal pattern that we're seeing here on the 4-hour chart does not indicate the reversal of the entire crypto market bull run over. This is indicating on the 4-hour chart that in the near term, meaning over the course of the next few days, maybe in the next week and a half or so, we may be getting a pullback. This bull trend, this bull trend here, not this. This goes back to January. Do you see a head and shoulders here? No, we do see a wick here, which also suggests that we may be seeing a little bit of softening of the bullish price action in the crypto market. But in the near term, what would this look like? This would look like a reduction. And remember, this is total, so it also includes Bitcoin and Ethereum. This would see about a $400 billion reduction in the total market cap. Now remember, that's split across Bitcoin, across Ethereum, across altcoins. And if this pulls back, we're going to get some key signals here on this pullback. Very key signal. And that is this. On a drop that we're going to likely see in Bitcoin, how does Ethereum respond? How do the alts respond? If it's absolute nukes, if it's absolute meltdown in the alts, then we may have a bit of a delay for when the alts really see a resurgence to get that alt season vibe that we were just having only a matter of 2-3 days ago. If this market pulls back and we see Bitcoin predominantly pull back, Ethereum kind of chop in the range that it is. It's still up here at $4,400. If it drops down here to $4,300, this would be a reasonable support level that wouldn't be any sign of issue. If this drops below this, rejects and comes a bit deeper, still staying above $4,000 would still be a pretty darn good position to be in my opinion. Anything with this drop, really, I would say above 4,000 would be a pretty good position. If Ethereum loses this area, comes down into the upper threes, down into mid threes, you are going to see absolute carnage in the altcoins you're holding. But the flip side of that is you're also going to see great buying opportunities that are going to present. And in some of the coins you're holding, some of the things that you maybe have not bought yet, maybe you want to strengthen positions. The question is going to be down to what your strategy is. But we've got, let's see, we got about 1,100 people in the room. I just want to ask each and every single one of you, if you're tuned in here right now, make sure that you are hitting that like button, turning on your notifications. For those of you that are BitLab members here on the YouTube, and even if you're not, I will just tell you right now, we did another member stream yesterday, about 45 minutes, right here in the posts area. I had something listed all the way till this morning, in fact, just to rub it in your faces. If you don't have your notifications on, if you're not subscribed, you would have seen that had you been subscribed and had your notifications on, even if you weren't a member. I'm not always going to post that to the public, but of course the members section here where just the members can see is still there. You can go and watch it. I did about an hour breaking down a bunch of charts, talking about some of these breakdowns, talking about some other tools like Fibonacci's and divergences, and also some tips and tricks on TradingView. So go and watch this. I will share this in the live chat right now. Every single one of you that is tuned in, this is yesterday's member stream. This is in the live chat if you're watching on YouTube. If you're on X and you're missing some of this stuff, maybe you don't see some of the stuff I post, get over here on YouTube as well. Come and follow us here. But that is a member stream. It's a private link, but you'll be able to click it through and see that. Just want to let you guys know what we're doing. That's why I'm sharing it to some of the public here. But get involved, join, become a member. But we got some more things we want to look at, so let's dive into it. Let's dive into it. Now, what is it that we're seeing? The flip-flop from Besant, the Treasury Secretary yesterday, we're not going to buy any more Bitcoin. And then it turns out that, no, they're actually just not going to be actively buying it just new additions to the balance sheet from other money spent. In this case, what they're talking about is basically saying they are exploring adding Bitcoin, but doing it in what they talked about earlier, which are budget neutral ways. So there's a number of different ways they can do that. We'll cover, that's covered on a number of other channels. I want to get into the TA, but this is important. That big fear yesterday, and I really highlighted it. I don't care if the US buys Bitcoin or not. I don't. The Bitcoin protocol and ecosystem is strong enough without the US buying. Look at where it got all the way from January 2009 to where we're at, even before November 5th when Trump was running. What we're seeing right now is, yes, a bit more excitement about what it could mean if they're buying, but the support is here, guys, and I'm going to show you why in just a second. This is all basically irrelevant. If they do start to add, that will only be additional wonderfulness in this market. Now, continuing on, we see, I don't know why it's on fantasy football, but we are seeing some signs and signals. Although we're seeing the price action pull back right now on Ethereum, we see the price action, oh my God, it's crashing on Bitcoin. We're seeing a pullback on Ondo. Oh my God, we're seeing BNB. Oh my God. These are better opportunities. And the reason I know that is because when we look at what's going on in the market, we're seeing massive 1.82 billion stablecoin entry into Binance signals possible price upswing. Signal inflows often signal an interaction to deploy funds into the spot market, either for strategic accumulation or short-term trading. Either way, we're seeing this large spike in stablecoins, basically dry powder getting moved on exchange. What do you do on exchange? Buy or sell? So in this case, they're looking to sell. But Kelly, I thought you said it was bullish. I am. Stablecoins. They're looking to sell their stablecoins to what? Buy assets in those exchanges. So this is massively bullish. And it's not just this metric right here. We're also seeing the stablecoin market cap just being an incredible up into the right motion here. Look back here in the 260s. We're up here at $285 billion as of today. This is only going up and to the right. And so when we're seeing periods of softness in the market and we see some chopping around on the liquidity here where liquidation hot zones are getting flipped out and then we get these chops back and forth. But we're seeing the stable coins just absolutely printing. There's so much more capital that's already in the crypto ecosystem that has not yet been deployed into buying pressure. So we need to be a bit patient here because this is absolutely extraordinary to see. And it's not just this. We also see the triggers day over day. This is that $2 billion more minted. We see this million there, 100,000 there, 100,000 there, 100,000 there. It's just nonstop new printing, and they print when there's appetite to convert fiat to stablecoin. So this is what we're seeing. We're seeing the setup of dry powder just getting ready to absolutely go bananas in this market. So the market's pulling back. Great. Let's look for some opportunities to stack into our positions or get out of the charts and go and relax a little bit somewhere else with friends and family and our dogs and so on and so forth. My dog is dead asleep right next to me right here. I throw it on the dog cam, which I did set up yesterday, but she's not in the cage. She's sleeping on the couch right over here. I wonder if you can see. I can't. Yeah, the camera doesn't go over there, but we'll get back into that here in just a second. We're not getting back into that. She's sleeping. What am I talking about? But let's go through some more of these because, yeah, we're getting all the stablecoin prints, but we still have a likely, and in my opinion, a very likely still $150,000 target that is not going to be the top of the market. Even when you look at this right here on the log curves extended, this is from CryptoCon. I just want you to notice here, the target up here would be just around the $180,000 region. Now, when you come back over to my page right here and you look at this, these targets that we've had, let's actually zoom out on that and go like this. There we go. $158,000 would be the lowest side of the likely target that I've been projecting for quite some time. The high side of still within the likely target box is $213,000. So $180,000 from that log, the log extended curves there, would still be within this likely target range. It still wouldn't be in, oh my God, this is getting hyped, because we've hit the 3.618. We've gone all the way above the 6 and 7.618 in early cycles. Last cycle, we were somewhere right in this zone right here. Will we still hit all the way up into this zone? Meaning the Fibonacci extensions. What am I talking about, Kelly? You're speaking nonsense. Well, here we go. Let's go to the weekly chart, double click here. And I just want to highlight before we do these fib extensions, where we have come from. The low back here in November and December of 2022, up 683%. Not too bad. The low here on the pullback where the market, this is it. This is done. It's going to do like it did in 2019 where we had the fake pump and then the dump. No, look at this. It moved up another 382%. The sell-off here after the ETF crash, the launch, and then, oh my God, it crashed from 74. It's done. That was the top of the market because it went to a new all-time high before the halving. Well, we dropped from that point. Look at this. We dropped 30%. And what we see? Well, we saw a bounce from there, boom, 141% move. And this is since August last year, essentially. And then we see again, even on the sell-off here where we had the double top, the market tops over. You see, we were only barely going over 100. And then we bounced from there another 62%. It's my opinion that the best part of this market is still on the horizon. The most exciting part of this market. We have not broken out of this trend line yet. It's basically the top back here in April 2021, October, November 2021, all the way here to this next rejection point right here. And then look at this. We keep getting wicks above it. We have not gotten it. Those next targets up are the 154, 158,000 and beyond. And this is what I'm talking about. When you come back over here and look at the relative cycles, first off, look at all these dips on the way up, and it wasn't done. 37%, 42%, 34%, 34%, 44%, 41%. But the point I'm trying to make here is if you take a Fibonacci from the top here, draw it down to this bottom. Look at this. That cycle back in 2015 into 2017, this went well above the 6.618. I'm not expecting that because the market cap is exponentially larger. So let's look at a proxy from the last cycle right here. And this goes from the top, we're measuring to the bottom, right, to the low. And look at this. This price action went right, look at this, almost exactly to the 3.618. Now, will we do that again is a question because the market is a lot larger. However, although the market is a lot larger, when you see where we're at right now, option F, go down to the bottom, measure that out over across, and we can see, let's delete this other fib. Let's delete this fib. I just want to see here. Okay, option F from the top to the bottom. There we go. So currently, the 2.618, which is, I mean, this high went all the way up into the 3.618, and this went almost between the 3.618 and the 4.618. But we're seeing right here, this is, I mean, barely gotten up to the just over the 1.786. The next target, which is not only a measurement from this breakout point, is right up in here to this 2.618, the 154 to $158,000. In addition to that, we have these basically parallel channels that we've seen very, very respected. Bounce, bounce, rejection, bounce. Okay. Rejection, bounce, support, kind of chop right around rejection, support. Okay. Rejection, rejection, rejection. We're on basically on our way through breaking this out. And the parallel channel shows that the next move up, and they're all about 45% moves, shows that also would interact with the same level. So we have multiple targets in addition to what we see here on the log curves extended. And we've seen all cycles. This one was in the middle, but then we get to the top, then we get to the top, then we get to the top. Are we going to get to the middle or the top? We're basically still shy of the middle, but I'm still expecting this to get somewhere up into this region, whether it's later this year or early, sometime in end of Q2 next year or something. I very adamantly think that we're going to have an extended cycle specifically for Bitcoin. We're going to have to see what goes on with the altcoins, but the pullback right now, I'm not seeing a reasoning for what the market would be over for. So let's keep our wits about us, because we still have very bullish news for September. We still have 92% opportunity likelihood for rate cuts in September. What does it look like in October? Well, look at this. This means that there would already have been a rate cut. Only 4% of people think that rate cuts are still unchanged. But we see here 43.7 plus 52.8. This is, I mean, that's right up there in that 95 percentile that correlates here with the September rate cut. But then we also see a likelihood of a second cut in October. So we're still getting indications that there's betting and expectation forward looking on rate cuts coming in. Now, I know we're talking about crypto. Kelly, why are you talking about the CME Fed Watch tool looking at Fed interest rates? That shit is boring. The reason we're talking about it is because it's impacting the risk narrative in the market. If people are expecting and have been at some point this year, we're going to start getting rate cuts, then if that candle flips and that narrative flips, then the risk becomes a lot tighter, meaning there's a lot less money flowing to risk. In fact, that would likely mean many, maybe not all, but much of the altcoin market would likely see a bit of a flood of capital out of it, meaning prices would fall. So let's kind of hope for some rate cuts, because if you are holding altcoins, it's going to be very, very, very important that those rate cuts happen if you're expecting that we're going to see capital go into risk markets. So with that being said, let's go on to the next chart. We also see this. Chair Paul Atkins says, "We are mobilizing to make America the great capital of the world." And this is all about the, basically doing the crypto. What the hell was it called? The Crypto Today, or Project Crypto. That's what it was. So Project Crypto, let's chart that up. Project Crypto is now being touted, despite what Besant was saying yesterday, the U.S. isn't going to be buying Bitcoin. Well, then he flip-flops and says, well, we're just going to be doing it. We're going to be accumulating Bitcoin through budget neutral ways. At the same time, we have the SEC chair, the complete opposite of Gary Gensler, saying that, we have Project Crypto now launching because they want to make America the crypto capital of the world. This is not just Trump saying it. This is the chair of this chief regulatory body, the Securities and Exchange Commission. So this is incredibly important right now, where we're seeing overwhelming support in the backdrop of this ecosystem, while people are worried here on a 4-hour chart that we're getting a little bit of a pullback. We're seeing, oh my God, the price action is pulling back a bit. Well, I mean, remember, we have lines on charts, and we have them there for reasons, because they're areas that price action has been respecting. So you see this on the 4-hour chart. You see Bitcoin is pulling back into this zone, this chop zone, with all of this price action right in here. This is where the price is right now. It came down, filled the CME futures gap. Yes, remember, we have the CME futures gap, came down, filled it. It doesn't mean it has to bounce here. In fact, it very likely could. Where did that chart go? I have too many charts. God dang it. Hold on a second. Too many freaking charts. Too many charts. There we go. So this is what we're looking for. If this loses this region right here where all this price interactivity happened, it's not the end of the world. In fact, maybe in this case, we can use something called an Elliott wave. I know I don't use them much on this channel because I try to keep things fairly consolidated with a lot of easy stuff, but these are fairly easy. So I'd love to introduce it to you if you don't know. Elliott waves are a theory that things move in 5 ways. You get a 1 wave, the bounce wave, which is a 2 wave, the continuation wave. So we're going to have to see what happens here. I'm pretending in this case that the price action is going to lose this. Then you get a further wave down like this, a bounce wave, which likely usually comes up to roughly about, roughly about where that previous low was. If there's some bullishness, and if it's very weak, then it won't bounce up anywhere near there. And then basically the 5 wave, which comes down somewhere a bit further. So you get 1, 2, 3, 4, 5 moves. Now, the alternative to this is if you get something that's like a 1, 2, 3, and it comes back up, then this is no longer really an Elliott wave theory, but then you could get the then you could get to 5 somewhere like this and basically bear trap here, come back in, find some support. And in this case, you'd be forming an inverse head and shoulders and then move up. The point here is this feels scary in the moment because you're not sure what's going to happen. But we're planning for it. We're looking at levels. We're looking at the data. We're looking at the context. We're looking at the landscape that's outlining what we could be seeing in the future. But Nicole Menace-Tater, how you doing? I haven't seen you in a minute. Hey, everyone. Everybody go give her a follow. She's also on X. She's a good friend of the family here. Granny's Garden, also good to see you. Brian Wild, great to see you. Yeah, I just want better returns, a.k.a. Plume and Morpho. That's right. Well, who else we got in here? We got the whole crew in here today. Theo Rodriguez, Sparrowhawk. Can you talk more on your super cycle thesis? Yeah, I can talk a little bit more about that. Let's see. Ollie, you know it. Granny's Garden, you know about Ollie. Oh, here, I have to show you guys. Because I talk so, when you guys meet me in person, a lot of you, some of you have, I'm so different in person than I am on stream because here I try to give as much information as possible, but I am a silly goose. I am never nonstop joking. I'm just overwhelmingly playful, and it doesn't really come across on these streams because I'm like, there's 3 hours worth of stuff I want to cram into you guys in these 45 shows, 45-minute hour shows. But let me show you Ollie because she's my little. Where's she at? Was that her? Look at this. Look at this girl. Really, she is a lovely little monkey. Can we just get back to December highs before the Fed meeting? You know what? Right? I'd like to have so much momentum into December. A pullback in December would be more about a little bit of tax harvesting if there is any, which we could likely count on a bit, which does happen regularly in December's. But you ask, why do I think there's going to be a super cycle? And by super cycle, let me take that word out of it. Why do I think the 4-year cycle is not going to hold as true this cycle? I think it's going to do 2 things. I think we will extend and have a continuation of bullish upside price action in the crypto market in 2026, maybe into the middle, maybe into Q3, Q4. Likely Q3 is kind of my target. End of half, sometime in Q3 is the top. And it's because we've had quantitative tightening for the last several years. It's been projected, one, that the Treasury Journal, I actually have it here. Why do I not have this up here? It's the next thing's here. I'm going to highlight this for you right here. One, we're seeing banks onboarded in ways you can't imagine. Now, I don't personally like the banks are getting involved, but for the context of the asset in terms of price, it's amazing because it's going to accelerate the amount of adoption that comes in and, one, limit the amount of oversight of just the regulation by enforcement that we had seen. We're seeing banks across the board actively getting involved in Bitcoin, not just in crypto in general, but not just Wells Fargo. We also see that the altcoins have not made anywhere near their move that we would have expected to see at all. Now, Bitcoin's been a bit of the star of the show, but there's other things in here. Did I not bring these up? I don't think I brought it up. Where the hell is that damn thing? Let me see here. Let's see. This right here. Breaking news. The Federal Reserve's reverse repo reaches its lowest level in more than 4 years. Do you know what happens next? This is essentially right here. If you zoom down on this, you can see. Grok, what happens next? The Federal Reserve reverse repo dropping to a 4-year low signals draining excess liquidity from the system. Institutions are parking less cash overnight, often due to quantitative tightening or better yields elsewhere. Next focus shifts to bank reserves. If they tighten, money market rates may rise, possibly prompting the Fed adjustments to avoid stress. Now, there's other things like the Treasury General Account, the TGA, that's basically just been rolled off incredibly. There's not a lot of the strings, the puppet strings that they've been utilizing to move the market with silent quantitative easing, with all this, background, shadowy, dark room money that they're able to move around and say, we're not doing quantitative tightening, we're not printing new money. They're utilizing all these other subversive mechanisms to keep the economy afloat as of late. Now, on the one hand, we're in this predicament where we printed so much money during COVID that it's still having carryover effects into what we're seeing in the economy. We're still seeing consumer price inflation ridiculously outpacing what they try to keep it at 2%. Well, I know everything in my life costs somewhere between 30 to 60% more than it did 2019 or before that, right? So it's all kind of a lie and a charade. At the same time, they have to be very careful about threading the needle of interest rates, threading the needle of when they cut, because if they cut and there's a lot more money that enters the system and then you see inflation rise again, then they completely subverted everything that they tried to do with quantitative tightening in the last 2 years. So there's a very precarious situation. As much as people are hating on Powell, I do not envy his position, because it's an impossible position to be in. But because the U.S. has over $37 trillion in debt, our interest right now costs us $1 in every $4 the government spends. 25% of every spending dollar right now in the government is going to interest on our debt. Now, why does that have to do with Fed rates? Because Fed rates also impact the interest rates that the U.S. government has to pay. So because our interest rates are what they are right now, that is leading to a huge, overwhelmingly high amount of interest that we're paying. That's also higher because the Fed interest rate is higher. If they start cutting, that also will save America money in terms of how much those interest rates are. Now, the problem with that is you're also saving everybody else money, which feels good, right? But then you're also back to that battle of trying to make sure everybody has money, but also making sure not everybody has money in a way that they're spending it in consumer goods, and then you drive up inflation yet again, and then you're in the same cyclical problem. And we're trying as hard as we can not to turn into Argentina. Because this is such a convoluted bag of horse, you know what I was going to say? That's why I Bitcoin, because it's outside of all of these government controls. It's outside of all of these puppet masters and strings and all the nonsense. It is the exit to the system. Now, the crazy thing is that the system is getting involved with it. That's why I made this shirt. Proud to be cash poor. For the people, by the people. You can see right there. And it's got all the different flags of the world. And on the back of the shirt, it says stack like your future depends on it. And it's got an overlay of essentially the U.S. debt that's masked into the text. And it's because of these things we're seeing the issues with the Fed, the issues with inflation, the issues with, money spending, and the nonsense we saw from the Doge Commission there, all the bad spending they saw. But guys, let's get into some charts. I'm tired of talking all this nonsense. Let's look at some charts. What the hell is going on? Let me see what you guys are saying. Buy the support instead of liking. You could, hit the like. What's stupid clickbait? I don't know. I love it when people come in and they have something, maybe I'm reading it wrong. Maybe somebody just is in a bad position in their life and they're being negative. Maybe that meant something else. I don't know. Then you should be much more bullish on Caspa, says Crypto Tony. Being it's the only other crypto currency that is for the people, by the people. Well, maybe. Chris Pfaff has one of these shirts. So does Nicole Minister Tater. All right, now let's get into it. So let's stay on the 4 hour, because it's a good kind of context of what we're seeing right now. We had the washout to the downside. And what have I been talking about over the last 3 years on this channel? In this market, although there are patterns that typically play out on assets, this is also a highly hyped up asset class, the crypto asset class. So while this might have been a bit of a bull flag here, you get the wash, it breaks to the downside first and then broke to the upside. So we're getting a double washout of liquidity in both directions. Let's make the bulls give up and trap them and make them go bearish. Let's trap the bears, bear trap. Okay, now come back up. Now let's trap the bulls, come back. Now let's commit them back to going bearish. So you're washing out liquidity. You're shaking out weak hands. And the liquidity I'm talking about are those people that are leverage trading, trading 2x, 3x, 10x, idiots doing 40x or 100x. That's what I'm talking about. Or even people trading spot and they're scared. So they sell. Oh my God, it's going down. I sell. And then it goes back up. And now they think they're going to miss the boat. So they buy. And then it starts moving down. So they sell again. So they sold here. They sold down here where they already lost percentage points. The price action moves up. Now they don't want to miss the boat. So they buy. So now they bought less than what they had before. It drops again. So they're losing money in that drop. And then they sell. And then the price moves up again. So we're seeing a lot of these washouts, and we've been seeing it in the market over and over again. You see this. I mean, to move up, to clear that liquidity, come down, clear this liquidity, come back up, clear that liquidity, come back. These oscillations in the market are normal. They're just more pronounced in crypto. One, because the market caps are smaller than a lot of the stocks you're trading, but two, because there's just a lot more degeneracy in the trading and investing side of this. Now you see, we talked about up here coming down into the 117s, even potentially down to the 115s because of these heat zones that we're heating up here. The bright colors on these liquidation heat maps show areas of a lot of liquidity that could be scooped up, meaning people went long here at different levels, at different 2x, 3x, 4x, 10x, whatever. And as they're going long, this area is down here. This would be the price point at which these longs would get closed out, meaning they would have to sell. And so as the price action is coming down, people are longing still 2x, 3x, longing. Now down here, longing 20x, 30x. And you get these huge amount of liquidity zones. So it taps into them, then pushes up. And you have people shorting. Push it into these. Now, at some point, I do think we're going to come up here and scoop up this 120. I don't know if it'll be a bounce and then a continuation down, or right now things look postured to have a little bit more of a down move. But you know what I'm looking forward? This is Friday. CME futures close on Friday evening, Friday afternoon. They open Sunday. We keep getting these gap downs. So when you understand the market dynamics in this market, then you also realize that because today's Friday, and because CME gaps, and as of late, have been to the downside, see how this gapped up, meaning the Friday closed here, Sunday opened up here. Well, the price came down. Look at this, filled this out. Now we pushed up, gapped again. Friday opened up Sunday. Now we came down and cleared this out. If we do get a down move on price action Saturday and Sunday, Friday evening, Friday night, Saturday, Sunday, before futures open on Sunday, then we stand to potentially, let's say this price action moves down into this region down here, or even down into here. Then you have essentially, if this opens, then you have this big gap area of the price action having a liquidity magnet back up to fill that. And then we can reassess. If this fills this and then drops, that just gets a bit more frustrating and scary for the people that want it to go long now. But at least in this situation, maybe we're setting up to have some gap ups, meaning that magnet to pull us to the upside. We have to let the market play out in whatever way it's going to play out. There's a lot of things on the horizon. There's a complete whirlwind, 180 degree into another universe change from what we're seeing in our administration, the clarity around the recent legislation with the Clarity Act and the Genius Act, banks coming on board, the ETFs smashing every record of any asset ever for ETFs. They're approaching $100 billion in the IBIT ETF. We're seeing corporations stacking like there's no tomorrow. We're seeing Coinbase just release a whole thing regarding getting bullish on altcoins and alt season. We're also seeing things like OKB, an exchange token. They burned $7 billion worth of tokens. So if you're wondering why this pumps so much, we're seeing a lot of movement in these charts, especially if we come over here, even onto CoinMarketCap and go back just a little bit and go, let's say 7 days, we're still seeing some pretty large gains, even with some of these pullbacks. 98% gain, almost 100% gain on OKB. We have 44% up still on Aerodrome, even with this pullback. Radium up 24%, KuCoin up 23%. We're still seeing a lot of great things in this market, and people are worried because we're getting a little bit of the retrace portion of a rise, retrace, continuation. I know I talk about this a lot. I know I say things sometimes repeatedly day over day, but that's because so many people they're hearing it. They're saying, I heard it before, but you're still getting frustrated in the charts. We need to lock this into our heads because this is still, look at all these coins that have still outperformed Bitcoin right here. This is in the top 100 coins over the last 90 days. It's starting to shrink a little bit. We still got a lot of room to grow for the alt season. Now, when we come over here, we look at this. Let's go down. Let's look at, for instance, Ondo. Okay, now look, what do we see? A breakdown. We came up, rejected at the trend line, and a confirmation further down. Okay, is it the end of the world? No, it means we get a better opportunity. We talked about this the other day. I don't remember if it was in the member stream or here on the live stream. I talked about if this does reject, we could be seeing it back at about 100, or potentially down into the 95, 93 region. Why? Because you see this line right here. This is right at 95, and you know that sort of window right in here. If we are able to get an opportunity, I mean, look at that 92. If we're able to get the opportunity down here, I would be jumping at it like mad. Link, I think they have major things coming. In fact, they have the SmartCon coming up in 2 months. Was it 3 months now? I think it's November in New York. But I mean, head and shoulders, great. If we are prepared, we're not mad at this. We go, are you telling me? So you're saying there's a chance. So in this case, let's do the line. It's kind of like this. It's kind of ugly. It's kind of like that. Let's go to the 1 hour. Yeah, this is ugly because it's just a wick. But to me, I don't necessarily see, I'm going to look at the level so I'm aware of it, but I don't necessarily see this dropping down to $18. I could be very prepared for it, but I see like this region, the $20 region, which I called out earlier this week. I talked about price action pushing up. Large momentum, look, tiny momentum. That alone told me there is a bit of weakness. Then you look at the bearish divergence. See this price action moving up? Bearish divergence. Divergence in money flow. Slight divergence in money flow here. And then what are we seeing? Now we've formed the bearish pattern that concludes that. And there is a target that's down here to $18. So we will put this on the chart. This does correspond with some tops, which is this top, this top, this top, this top, and kind of this bottom over here. Yeah. Oh, also this top here. But yeah. So, but we're looking at this region right here. Now let's look at the fib, option F, to see if anything lines up. Okay. So look at this. So the 382 is kind of what we're holding on to now. If the price action loses that, I'm looking for a target realistically for Chainlink to be somewhere about right here. I think it could front run this entirely and not come all the way down to sub 20, which is right here, this golden pocket, the 618 fib, the golden fib. By the way, that link I shared in there earlier, scroll up in the live chat. I shared the member stream. I broke down how and why I draw fibs and how it really helps you hit some targets, or at least gives you a roadmap of areas of interest. But yeah, I'd be watching in this area here. I'd be prepared for this, but if I bought here and this dropped, it wouldn't necessarily bother me because I know that there's a target there. But for me, I'm trying to stack like mad. So I'm taking advantage of stuff. I'm feeling like this is going to be more of a bull trap. Aerodrome also, remember, still up 44%. Oh my God, somebody messaged me. Should I get out? Aerodrome's crashing. Well, I don't particularly see Aerodrome crashing. I see Aerodrome, let me redraw this. I see Aerodrome in a pullback. Okay. Now, if it loses this, still not the end of the world. We have this level here, right down to 125. We lose that coming down here, but let's do the fib, option F to the top. Okay. So we're sitting, same thing as Chainlink, right on the 382. If we lose that, then yes, look at that. That next level down, 125, is right at the golden pocket. This 0.618 is what I'm talking about. 0.618, 0.65. That's the golden pocket. And that's roughly right about where these tops are and where this bounce. So that's where I'd be looking. If it loses that, then I'm looking to the next level down right here, about $1.18. I'm just in ultimate stacking mode right now because when this market finally has its alt move, for those of you that have not been here, you don't understand. It's not like you can, when the alts move, for those of you that are new, when the alts move, it's not like once it starts moving, you're going to jump in. You've missed it. Because what happens with the altcoins in this market, and I really want to impress, I hope all of you are overwhelmingly weighted in Bitcoin in your portfolios. But if you're going to take some shots on alts and a percentage of your portfolio, when they move in the course of about a 1.5 to 3 week time frame. Very quick. And it's kind of like a shotgun approach across multiple different coins where this one pumps 70% and then the next day 20% and then pulls back 10% and then pumps another 60%. And this one pumps 30%, pulls back 10%, pumps 60%, and it's just like you're just like, you feel like you hit the lottery for about 3 weeks. But there are some big swings and big pullbacks. It's not easy as people say. When you look back at this market and you see the monster gains, when you see on the others chart, for instance, right here, and you look back, man, if I was just there, back there in that cycle back here, I would have made so much money in the altcoins. Or right here, I would have made so much money. But look at this. This is not that much time. Look at this. That's 1 month. That's 3 months right there. That's a 3-month window. And in that window, you also had a pretty massive pullback there. That is, look at that, 55% pullback. You're telling me that you would have made a killing on this movement here on your altcoins when you had a 55% pullback and then another, look at that, 58% pullback. I mean, guys, you need to have steadfast nerves of steel to kill in the altcoin game. And you need to understand what your targets are, your time projections, and what your exit strategy is, and whether or not you got in and you're getting into good profits. If you exit here and you miss out on all of this, that is not the end of the world. If you entered anywhere, like all of us have been stacking, like if you think of this cycle, like the last cycle, we've all been stacking in this whole period here and this whole period here. So let's take an average of that, or about roughly about right there. That still would have been look at that. That's a 6,700% gain on aggregate for the others, for the altcoins. Now, it doesn't bother me if you miss out on that last leg. If you're making profits 2x, 3x, 5x, 10x in some cases, then take some freaking profits. Have your exit strategy, because this market is going to be it's going to be freaking bananas here in the near future. It may be into Q3, into Q4. It may be 2026. The market is really tangling with geopolitics and the Fed and what's going on with the administration and the change of tariffs and This is a confusing, perplexing cycle to be in. And I've been in these markets for 10 years. So I do not envy you if you're feeling lost. That's why you got to get in these spaces, get in these rooms, join the Discord. It's in the description down below. Get in the Twitter education, talk with people. You need to have your clear plan and make sure your clear plan is established based on data that you're pulling together, not just what somebody else is telling you. Because I'm telling you, when you look at this and you go, man, I can't wait for this to happen in this cycle. This is a mofo to deal with on the way up. So have your conviction landed and have your exit strategies planned so that you can do it. And if you miss some of the profits, that's okay, because you turn to profit, and over 90% of people that trade markets don't. When you realize that, you realize how important this is. And Crypto Billy, Givers Gain, shout out to you, my good friend. I hope you're doing well. And big love to each and every one of you. I love, before we leave right now, I love everybody that's tuned in. We've got 2,679 people tuned in. Big love to you, wherever you're at, whether you're on YouTube, whether you're on Rumble, whether you're here on X, any of these. Drop a comment either in the live chat or down below the posting what you're grateful for today. 2 things. Something can be about yourself and something can be about, maybe the markets, but make it meaningful. What I want you to really think, what's something you're grateful for? What's the second thing you're grateful for? I'm grateful I have the ability to walk. That sounds silly, but I also broke 22 bones. I've had 85 surgeries, 2 different motorcycle accidents. Well, Kelly, why'd you ride a motorcycle again? Well, I lived in Thailand and the only way to get around was a scooter. So those questions are irrelevant to me. I think it's stupid when people ask me that. Because we all live our life. We do what we do. We get our hearts broken. We lose money in markets. We learn about it. We either give up or we learn new methods so that we can absolutely dominate and crush. And you can only do that if you're grateful for what you have. If you take stock of what your limitations are, own those limitations. Acknowledge them. Cherish them. Figure out what your superpowers are. Figure out what people in your life you're grateful for. And that includes people that frustrate you because they give you context of greatness. and also areas that you can improve in how you deal with things that frustrate you. But I love you guys. I appreciate you. It is Friday, almost in April, August 15th. I hope you're all having a wonderful day. But I'll leave it at that. I know I kind of went on a bit of a. I just want you all to be positive. I don't see any grateful things here. Nothing. Well, I appreciate you guys listening. Hope you have a wonderful day. Bye. And I'm grateful for Crypto Billy's super chat. Thank you so much, my man. Paying it forward, MTC. Big love to you, man. Everybody have a wonderful weekend. I'm leaving this open so I can still read y'all's grateful things. Let's see them. I'm grateful for my mom and dad, says Kevin C. I'm grateful for you, bro. And I could say that about you, my friend, and every single one of you that's tuned in here. I really do love you all, and I do appreciate you all. And I'm so glad we're on this journey together, just plugging away at these markets, learning. Think about it. How many of you all 5 years ago? I'm going to go back full screen. How many of you all 5 years ago would have thought that, or 7, or however long it was before you got into crypto, if you never did any other finance stuff, would you have thought that you'd be excited about learning about what's going on with the markets? And because of this, now you're like, what the hell's the Fed chair doing? What's the SEC? I mean, the types of things that we sit and talk about and dive into in content on a daily basis, nonstop. I mean, it's pretty wild. The mental doors that Bitcoin and crypto has opened for people, understanding the value of the dollar or the lack of value of the dollar, understanding that the network of different financial structures and tools and mechanisms and assets and all these things and policy, how all these things tie together. It is bizarre, but we have to care about this, because think about it. The more we care about our money, as selfish as it is, it's like Sigmund Freud. You got to care about your money, because if you don't, then you're also not caring about how money's spent. And if you're not caring about how money's spent, then there's no future for our kids in whatever country you're in. So let's all be grateful that we found our way to Bitcoin, or Bitcoin found its way to us, and found our way to crypto and altcoins and trading and learning and accepting our failures and growing through them, and leveling up. Let's level up together. And with that, that's my last little interjection here. I love you all, and have an absolutely fantastic weekend. Adios, muchachos. Thank you for coming. Thank you for always tuning in. BitLab Academy, baby.